Hello, I'm Ken Carpenter, and this is Invest AI Savvy, where AI powers smart investing. April 18th, 1906, 5:13 in the morning, San Francisco. The ground jackhammers for 42 seconds. 42 seconds is all it takes to cripple the largest port on the West Coast, ignite 300 city blocks, and flatten the financial district into rubble. By sunset, half the city is gone. And in lower Manhattan, 3 time zones ahead, a 28-year-old trader named Jesse Livermore walks into a brokerage office on Broadway, 10 in the morning Eastern. Most of Wall Street has not yet heard the news. The bond pit is calm, the ticker tape is calm, and Livermore, lean, quiet, already known on the street as the boy plunger, walks up to a clerk and starts shorting Union Pacific. Not on inside information, not on a model, because he understood three things the rest of the room did not yet understand. The largest port on the West Coast had just stopped working. The insurance industry was about to take the largest single event hit in its history, with the railroads paying through their freight contracts for years. And westbound railroad traffic now had no destination because there was nothing left in San Francisco to ship to. Three converging lines of evidence, three independent data streams, all pointing the same direction. Livermore had the discipline to act before the room caught up. He made $250,000 in a single trading day, roughly $9 million in 2026, made on a setup nobody else in the room could see because they were waiting for confirmation from sources that were already on fire. Welcome to Saturday, May 9th, 2026. This morning, the BuzzPulse algorithm did something that might feel counterintuitive. It didn't lock on a signal of the day. It scanned 57,000 equities and over 17,000 crypto tokens overnight. Not a single one surfaced with the mandatory BuzzPulse 4 layers of independent confirmation. The VIX is at 17, sentiment is drifting aimlessly, and the market is suspended in a holding pattern. Today isn't about chasing a dopamine hit with a forced half-baked signal. Today is a real-time report card wrapped in historical perspective. Now, quick housekeeping, the show's strictly for educational purposes, and it's absolutely not investment advice. You are responsible for your own trades, and you've got to do your own research. So hopefully we're good. Okay. But now let's check the macro tape. Bitcoin's holding steady near $80,200, and sentiment is heavily positive, 73% on Lunar Crush, driven by BlackRock's institutional weight and relentless ETF inflows. Bitcoin dominance sits at 60%. Ethereum is hovering around 2,300, bolstered by BlackRock's announcement of tokenized money market funds launching directly on its network. This is the kind of massive plumbing upgrade that quietly changes the long-term game. In traditional markets, the VIX bled out almost 14% over 5 days. Fed Chair Jerome Powell delivered a soothing, steady as she goes FOMC statement Wednesday, and the market took it as permission to put its feet up and drift. But calm, boring rooms are exactly where Jesse Livermore made his generational wealth. When the herd is hypnotized by a flat tape, explosive, high conviction trades hide in the microcaps and the sector pivots. That's exactly what happened this week. The headline tape was quiet, but underneath, BuzzPulse locked onto three massive ideas. Number one, the big one, BlackBerry, ticker symbol BB. The system locked BlackBerry as Tuesday's signal of the day at $5.58, not as a nostalgic meme stock flyer, but as a rigid 6-layer convergence read. BuzzPulse flashed a Z-score of 5.6. Momentum was mechanically confirmed. We saw aggressive call actions activity paired with incredibly cheap implied volatility plus Russell 2000 index membership, providing structural liquidity. 6 distinct streams, same type window, same upward direction. By Friday's close, BlackBerry hit $6.37. That's a 14.2% rip in 4 trading days, shattering BlackBerry's 52-week high. Now, why? 3 separate catalysts fired publicly after our system caught the signal. Their QNX automotive software quietly dominating the market, an edge AI partnership with NVIDIA, and a renewed share buyback program. The algorithm saw this pressure building in the social and options data 4 full days before the buyback was officially announced. The conversation was already happening in the shadows. The price action simply followed the footprints. That's the Livermore trade in 2026. Wait for the layers to stack and act before the rest of the room sees them, unless they're listening to this show. Now, number 2, Mara Holdings, ticker MARA, a legacy Bitcoin miner pivoting violently and brilliantly into AI power infrastructure. The system flagged Mara Monday morning with a towering Z-score of 5.6, backed by 10 layers of convergence, 35% short interest, and rock bottom implied volatility. Monday's open, $11.39. Friday's close, $13.22. That's a 16% surge in 5 trading days and recommended by BuzzPulse. While Mara sat on our watch list Monday, they were behind closed doors finalizing a transformational $1.5 billion acquisition of Long Ridge Energy and Power. Wall Street repriced the thesis the second it went public. Keep an eye on their earnings dropping Monday after the close. Number 3, AMC Entertainment, ticker AMC, flagged by Invest AI Savvy, Tuesday at $1.45 with a jaw-dropping Z-score of 13.2, the highest social acceleration in the entire global dataset. Earnings landed Tuesday after the close. Revenue beat expectations at over $1 billion. Theater attendance was up year over year, and adjusted EBITDA hit a 7-year high. Friday's close, $1.52, up 4.8% in 3 days. Not a moonshot, but our mechanical 8% stop never came close to triggering. The system successfully caught the massive social surge before the earnings reaction even began. 3 names, 3 precise BuzzPulse convergence reads, all flagged in real time, still running into Monday's open. Now, the second half of the Livermore story, and this is sort of a sad and brutal reality nobody on Wall Street likes to talk about, but the exact same Jesse Livermore who made $9 million in a single day on 1906 went absolutely broke in 1907, 1 year later. He got started trading on hunches. He got bored and stopped waiting for the layers to stack. He didn't have access to Invest AI Savvy. He clawed his way back, made another fortune in 1907, went broke again in 1914 trying to catch falling knives. He returned a third time, making roughly $2 billion in today's money, shorting the 1929 crash. He was an absolute god of the markets. And then he lost every single penny over the next 5 years, trading purely on internal conviction without a shred of data confirmation. By 1934, broke for the third time, the man who invented modern technical analysis filed for personal bankruptcy. In 1940, he wrote a haunting letter to his wife, calling his life a failure, and shot himself in the cloakroom of the Sherry Netherland Hotel. Same brilliant mind, same primal instincts. The only difference between the $9 million triumph and the tragic end in the cloakroom was discipline. It's a razor-thin line between 3 converging streams of evidence pointing the same direction and one loud stream of personal conviction with absolutely nothing underneath it to catch you when you literally shoot yourself in the cloakroom. Which is exactly why this morning, when the Invest AI Savvy algorithm refused to lock in on a signal of the day, my first reaction was relief. The system already did the heavy lifting this week. BlackBerry was up 14%, Mara was up 16%, AMC was up almost 5%. The discipline paid off. There's zero logical reason to force a fourth name today just because the camera's rolling. Next, the single layer watch list. These are the names the system's tracking, but hasn't fully confirmed on all cylinders. The first is Webull, ticker BULL. Webull is an online stock trading app, a competitor to Robinhood that went public last year. The system flagged it Thursday with a Z-score of 7.3. The story was simple. Retail traders were pitching Webull as a cheaper, undervalued version of Robinhood. That afternoon, Webull's board authorized a $100 million share buyback. A buyback's when a company uses its own cash to repurchase its stock, which is the kind of move management makes when they think maybe the stock is a little undervalued. The retail whisper turned into management action in the same 12-hour window. The stock closed Friday near $7. We're watching that one closely. Now, second is Cardano, ticker ADA. Cardano is one of the larger cryptocurrencies, a competitor to Ethereum. The system flagged it Thursday with a Galaxy score of 73. Galaxy score is the lunar crush metric from 0 to 100 that combines social engagement with price performance. 73 is a pretty strong reading, but there was no news catalyst, just sustained organic community interest. Then on Friday, asset manager Grayscale publicly raised their Cardano allocation. That's institutional money showing up to confirm what the social signal was anticipating. Cardano is up roughly 8% over 8 days. Third is Nano Nuclear Energy, ticker symbol NNE. Nano Nuclear is a small cap company building portable nuclear microreactors, compact fission reactors small enough to truck onto an industrial site. The system flagged it Thursday on a developing partnership angle. Sentiment is at 93% positive. Goldman Sachs just publicly went bullish on the nuclear sector because AI data centers need enormous amounts of round-the-clock power, and nuclear is the only source that scales. The stock closed at $27.50, up 17% on the week. Looking ahead, the single biggest event on next week's calendar is CPI. April inflation data drops Wednesday, May 13th. With the VIX this dangerously compressed and market sentiment this complacent, a hot inflation print could reprice risk across the board in seconds. Mara reports Monday after the close, which is a massive binary catalyst. DGXX reports Thursday. If you're putting fresh capital to work before Wednesday afternoon, don't forget about it. Bottom line on the week, the system flagged Convergence Monday in Mara, nailed a 6-layer convergence on Tuesday in BlackBerry, and caught a binary earnings setup Tuesday in AMC. Everything's running 100%. All three closed Friday in the green. The 8% mechanical stop never even came close. Now, this morning, the system didn't lock a fresh signal, and that's the BuzzPulse system just doing its job. Forcing a random trade because it's Saturday is exactly the fatal mistake that Jesse Livermore made in 1907. The discipline is the entire edge. The watch list tells you where to look, and the greed list tells you where the trap is hidden. This week, the proof layer proved the system caught 3 massive movers in real time before the catalysts went public and before the room caught up. That's the power of algorithmic discovery. We document every second of it. The free 7-day trial and the live dashboard link are in the description. Remember, BuzzPulse tells you what the market's talking about and whether that attention is unusual. We don't tell you what to buy or sell. That's your call. I'm Ken Carpenter. This is Invest AI Savvy, and that's the way it is.